Yeah, so if we look at the used car prices on car gurus year over year, they're down about 7.5%, which is obviously a positive factor for car buyers. And we're seeing new car prices down about 3.3%. But one thing I like to keep in mind is that even though we've been seeing the overall prices go down with interest rates at multi-decade highs, and now with auto insurance rates creeping up a lot, for overall consumers on a kind of all-in monthly payment point of view, they may not be feeling as much relief as what they initially would have expected with those price declines.
Is this like a temporary thing, or does it potentially show a shift in the trend?
No, I think you're going to continue to see prices come down, both on the new and used side. They're over-indexed compared to where baseline inflation would have them be. So there still is more room for vehicle prices to come down. But, for the most part, consumers tend to view vehicles at a monthly payment point of view,
right,
versus the overall price of the vehicle. So for that monthly payment point of view, it might still be a little bit hotter than what they initially would have expected.
I see. So you add everything in together, even though the prices of the cars come down, you got to pay more for insurance, as we saw. That was one of the big points of increasing inflation within the last month. So does that then kind of force the hand of the dealers to tweak to try and fit that, or does it just mean sales stall out? Are we at a point where dealers can still make money by cutting prices? Like, how much more wiggle room is there?
So there's still a decent amount of balance to be found in the overall market.
Okay.
In fact, we're seeing new and used sales still up this year. So consumer demand for vehicles is still hot, even with that kind of factor out there. I think you saw a decent number of consumers who may have sat out the last couple of years when prices were really hot on vehicles, particularly on the new and used side. And so you're seeing them come back into the marketplace. So even though that monthly payment hasn't dropped as much as expected, it's not increasing as much as well with the price declines or price moderations we've been seeing. And so we're still seeing pretty healthy demand out there on that front. I will note that new vehicle inventory is approaching about 4-year highs at this point. And with that, we're starting to see a lot more of those kind of new vehicle incentives come back into the marketplace. So if you are looking for kind of teaser interest rates, possibly cash deals and maybe even the lease deals, those are becoming a much more possible now.
Okay. Is there a point at which the new car prices get low enough to eat into the used car market, or is that still a distinct buyer base?
Yeah, there's still such a huge kind of spread between the two of them at this point. I would say it's probably not much of an overlap at this point.
Okay.
But we are seeing a lot of increased searches for people on the used side looking for vehicles under $10,000, and on the new side under $30,000. So small sedans, kind of surprisingly a hot segment on the new vehicle side of things right now.
Okay, so folks are trying to price down within the category of autos, generally both for used and new. 10K listings were hot for used, under 30K listings hot for the new cars. I think that's a pretty interesting data point there. What about, you mentioned the sedans, what about like EV versus ICE? Because we know a lot of those price cuts have come from the EV side. We've spent a lot of time watching Tesla shares get punished as a result, and some of the other businesses that have been struggling. What does that trade-off look like?
Yeah, so there still is a pretty significant price premium out there on the new side for EVs compared to hybrids or internal combustion engine vehicles. Interestingly, on the used EV side, we've seen the prices come down so dramatically. It's driving up used EV demand on that front. So I still continue to think there's a lot of interest in EVs out there. They're just too expensive, particularly on the new front right now. The average kind of price premium from a new EV to internal combustion engine vehicle is about $300 a month if you work it out in the payment point of view. So I think that's kind of holding off consumer demand on that front. But as that continues to go down, I think there'll be a lot more interest. But hybrids, I mean, if they're going to have a time to shine, it's really now. I continue to say they're kind of like the Goldilocks kind of powertrain option out there for consumers who want, a greener vehicle, but also don't want to have some of the kind of negative lifestyle factors that come with EVs.
Limitations.
Charging and range.
Yeah. So we've got a 60 percentage point difference between General Motors stock and Tesla on the year. GM is being treated like they are the hero again. Do you see their cars as hitting that Goldilocks kind of demand?
Yeah, so I think you're seeing a lot of automakers who initially were going really heavily into EVs, and making some pretty bold kind of targets of how quickly they're going to switch over and away from internal combustion engine vehicles and hybrids, are now kind of moderating and going to let the kind of market and consumers really make the decision there. And so I think that's what you're seeing from most automakers at this point. And so it's honestly kind of a potential upside for kind of legacy automakers. So much of the focus was on EVs and kind of new entrants in the marketplace over the past couple of years. Now, this could be a real kind of opportunity for some of those kind of legacy automakers who do have those internal combustion engine vehicles to take advantage of it.